What's going on, guys? I just want to do a quick update on Bitcoin here. Nothing's really changed. Let me blow this up for you. I know that the quality, for whatever reason, on my screen sharing is not good. I don't understand why. I have a 1070 Ti. I mean, I have a lot of monitors, but I got to figure that out. Why it's not crystal clear, but anyway, it's basically the same same count as before. We're getting more confirmation here on this count playing out. We've got this big ugly move to the downside here, and this is kind of what I expect here. I have this completed. Let's see here. I have this as a completed. Hold on a second. Okay. Huh. Okay, here we go. Okay. Sorry, guys. I have this. Now I've already gone through this, so okay, I have this as a completed 5-wave structure to the downside. I'll change this degree here. Okay, here we go. I have this actually as a completed 1-wave, 1, 2, 3, 4, 5 down. I've gone through the lower time frames to verify everything. So basically what we have here is the final C of the B, which is a 5-wave. It's basically a 5, 3, 5 correction of A down, B up, C all the way down, before we go into our next move. So I have this basically as a big 1, 2. I'm sorry, a 5-wave structure going into the 1. We should go up somewhere around here for the 2. And we should come down into these lower targets. I believe I'm very confident in these boxes, even more so now. We did go in here and hit this. I think it was yesterday, which was my first target, and I actually expect to get down here to my final target down here. So, like I said in the video the other day, this is all corrective. It's like this is a correction of a correction. That's why this is it's just taking forever. Corrective waves are always slow. They're correcting an action. Corrections are always slow and methodical. So anyway, so we have that here. Same target up here, up for the big C here. So that remains to be seen, but it's going to depend on how much power we get off of this bounce. Now, the one thing I do not like, I really don't like this, is that I'm seeing on YouTube and a lot of technical analysts are looking down here, unfortunately, to this box down here, which is where my target is, and I really don't like the fact that a lot of people, a lot of knowledgeable people, have this same target I do. I never like that, because I don't like it. I feel like the markets will never reward the masses. You know, I always feel like the market will pay more to less people than they will pay instead of paying less to more people. I just, if that makes any sense, I know that might be a little confusing, but I don't like when everybody has the same target. And the only thing for me that I did like was, the only thing I did like was so many people were looking at this, and this is where they were going long. So I thought that was great. That was fantastic because that gave me more confidence that we were coming lower. So you know, I'm not liking that everybody is looking in this area now. So you know, but you know, I still feel really good about these targets down here. I think that as long as we can hold this line here, I think we're fine. I think we should get a big bounce here, but you know, we'll see. We'll see. You know, we can only, you know, cross the bridges as we get to them. So, but anyway, that brings me. I just want to go over one more quick thing here with you know, you guys that are really into Elliott waves, and the struggle that we all go through is, you know, and ABC looks a lot like a 1, 2, 3. You know, this ABC, you know, depending on if you know, depending on what you want to see, this could be a huge 1, 2, 3, 4, 5. You know, so a lot of times the waves are always going to look alike. There's always going to be more than one scenario. But with that being said, it's like every other form of technical analysis. The market is always going to look like it's going one way before it goes drastically the other. If everybody knew where the market was going and everybody was on the same side, it would never go that way, in other words. But basically, it comes back down to, you know, the forensic work of digging in, looking at the volume, looking at all the evidence, and, you know, which is more probable, which scenario is more probable. And of course, we go to, you know, a bigger time frames. I'm just focusing on this here, the hourly chart, because this is very valid and very important and very current and present to what's going on here. We're almost to where we're going to get some type of resolution down here. So, you know, as far as the macro level and all this stuff, I already have that charted. So, you know, and to me, that stuff is pretty obvious. And if it's not obvious, it's not very relevant now anyway. So, you know, you gotta go. We have to get through the hourly, and we have to get through, you know, these moves before these moves here start to come into play. So, you know, let's not get too far ahead of ourselves. But with that being said, the only reason I bring any of that stuff up is because with the Elliott wave, the struggle that all of us go through with figuring out, you know, what's really going on, what's the meat and potatoes of the move that's coming. You know, just really digging in and getting to, you know, getting to the I don't know how to describe, but basically getting to where are we most likely to go. And one of the tools that I use for this, I've actually been using this a long time, but I do want to give a shout out to one of my guys. His name is Quan. He's with Trade Devils, and he actually reminded me of this tool about a year ago. And this tool here is one of this tool will help you. This tool will help you figure out what moves are related to each other. What is one whole move? See, you can look at this whole move here as, okay, this is one move, or is it this is one move? And one of the things, and one of the most important elements of technical analysis that almost nobody goes through, and I don't see anybody anywhere utilizing this tool and this idea. But to me, it's just as important as price, and that's time. Especially when we're in a corrective cycle. What's more important than time? You know what I mean? The amount of time it takes is going to basically dictate where we're going as far as price. And that all ties into the market psychology and, just basically people's psychology, because people's idea of what is bullish and what is bearish, it's all relative to time and how much time have we spent in a certain area that now people, like if we were to go right now up to $4,000 in the next 24 hours, everybody would be so bullish, it would be out of their minds. Bitcoin's going to the moon, blah, blah, blah. Now, 3 months ago, when we were constantly writing 6,000, when we dropped to 4,000, it was the exact opposite. But it's the same price. You see what I'm saying? The only difference is the time that has elapsed, and it's all relative. And price and time are like, without getting too ridiculous, but it's almost like Einstein, space time. It's almost the same exact thing. Space and time is like equivalent to price and time. They are related. They interact with each other. They decide. They basically are the main ingredients and the major ingredients of market reversal. But anyway, I don't mean to go off on tangents, but this is one of the tools I use now. Okay, this is called fib time-based. What is it? Fib timeline, or whatever the hell they call it on TradingView. I don't know why they call it that. It doesn't work, but it's not what it is. It's not a trend. There's no trend here. It's just basically Fibonacci numbers, but instead of along the y-axis, it's along the along the x-axis, along the y-axis, which is time. And basically, I took the bottom here, the local bottom here, to the local top, and look at this. This is insanity. Look how fib time basically caught the bottom here. This whole move, I'm sorry. Let me zoom in a little better. Okay, this whole move here, this big green dildo, as a lot of people call them, these garbage pumps up. But look at the fib time. It's basically, it's the same thing. Look at this fib time. This was a move. This was another, what is this? This is the 100. This is the 618. This is the 50. Look at this. Boom, straight up. Okay, here's your your relative top here, and then the same thing. Look how look at this massive dump here, and how it follows this fib time zone. So basically, the reason that I bring that up is because look at this. This picked the bottom here. This picked the top. And so basically, what that tells me is this entire move is related to this move. And this is very important when you're counting, when you're doing your Elliott count, because that's what you're always looking for. You're always looking for, okay, what move is part of the bigger move? Stuff like that. It's just another tool and another a magnifying glass, if you will, as far as detective and forensic work. But okay, now I'm going to do this again here, and let's see what we got here. Oh, actually, sorry, I want to delete this. All right, let's get that out of there. Let's get this one here. Okay, so now I'm going to go from this peak to this move, and you know, I don't know why this isn't labeled on this chart, but this is the, I have this as the A, B, coming down for the C down here, the C of the B, excuse me. But let's see here. Trend based. Okay. So now I'm going to do this entire move here, and you have similar action here. Again, the dump follows fib time, and we are approaching the what is it? The seven. I believe this is the 786 here. This line. So this is a pretty important as far as time. And one of the things also is I'm sure that a lot of the bots and a lot of the algorithms are coded to read stuff like this. I mean, I can't imagine that they're not. But all right, let's get this off of here. This and can I do this? Okay. All right, there we go. That's what I wanted. Okay. So as you can see here, now, okay, again, this is the A, B, and this is where I pulled this fib time from. This bottom to this peak up here, which I have as A, B. So this is the B wave up here, the B of the bigger B, if you will. So again, pick the bottom perfectly. Look at the another green dildo here. Straight up wick pump. You can't even see it because look at this. It's right on this line. So again, you can see how the fib time that these moves are broken up and follow these it's like a line in the sand, if you will. It's almost like a divider, and it creates a new little baby trend inside of the bigger trend. So look at this. You have the big green dildo up on one of the fib levels, the big red dump right on another one, and same thing here. And we are approaching. Wow, look at this. We're actually approaching another big fib level, which I have this as a local bottom only on the hourly chart, and I actually had this as a target earlier today in my Telegram group. This green box down here for the completed 5 waves down for the 1. So basically, I was telling my members to basically cover your shorts if you're short here, and if you're feeling frisky and you want to counter trend, contrarian trade, you can go long here for a scalp, looking for, if you want to, add some leverage in here, 10 times, 25 times, whatever risk you're comfortable with. This should be a little bit of a nice move. I actually, let me get this off of here. Okay, so I can more blow this up now. All right, there we go. Okay, this wick here, I had drawn this box looking for this target, and once we hit the very bottom here, I went long, and at 50 times. Now, there's a lot of risk involved when you're trading 50 times. You have to be like a sniper. You really have to know what you're doing, and you have to basically cherry pick the bottom and exit right at the top, depending on your positions. It's extremely risky. I do not advise doing that. If you are going to do that, you want to use a very small portion of your portfolio and understand that if the trade starts going against you, you need to get the hell out, because when you're at 50 times, Bitcoin only has to move 2% for you to lose your entire portfolio. If you're if you're going to trade your entire portfolio at 50 times leverage. So if you're a new trader, don't do that. It's a very bad idea. But this is what I did. I picked right here, 50 times. And where did I sell? I did not sell the top because I was pretty happy with my percentage gain. I think I sold like the middle of this green candle because I knew that, look, even if we go up here, we're going to come back down anyway to create some sort of a double bottom before we can push back up. And I was up 14. I think I closed at like up 14% or 15% or something like that. But the point I'm making to you is I'm 50 times leverage. I'm up 14%. I don't want to give that back on a pullback, even if we're coming back up, because I'll just wait for the double bottom and come back in here. Why are you going to hold loss? You know, and that brings me to another point, which is basically consolidation. You know, that's a whole nother lesson. Again, forgive me, guys. I know a lot of you guys know this stuff. Or sorry, not consolidation. Everyone calls it compounded interest, or whatever the hell it is. It's not compounded interest. I don't know why people call it that. It's compounded profit. You're not earning interest. You're you know, whatever. So anyways, basically, when the point I'm trying to make here is, if you're not an experienced trader, do not use leverage. Do not go more than 5 times or 10 times, especially in this market, especially during corrective cycles. You will get obliterated. You know what I mean? This is shark territory in here. This wick chop, you know, garbage. But yeah, that's basically that. I'm just waiting now. I think for the next 48 hours or 24 to 48 hours, even 72 hours, this is going to be one big snooze fest. This is going to be extremely boring. There shouldn't be any big moves. It's going to be slow. You know what I mean? This here coming down like this, I do not want this low to break here right now. I want it to break later. So I don't expect this low to break here right now. You know, I'm actually happy that this is happening while I am live, but I do not expect this low to break. In fact, if this low breaks right now, I am going to reconsider a couple of things, and I'm going to recount my subwaves. I'm very confident that my primary count is correct, but this should not break now. Should not. 33.67 on Coinbase should not break right now. So if it does, I need to go back and recount my subwaves. But I'm not in a trade right now. It doesn't really matter. But yeah, I don't expect this to go lower than actually here. I'd be pretty surprised if we do. So, but you know, anything's possible. So yeah, I mean, that's it. I just wanted to, you can see here, we also have a death cross between the 20-hour moving average and the 50. You know, these death crosses and stuff like that. People put too much emphasis on this type of stuff. And you know, if it's on, because basically a death crosses are when moving averages cross, and I think they're more. You can't call a 1 hour chart moving average cross a death cross. It's not death. It happens all the time. You know, that's just what happens. Now, if you're talking on a weekly scale or a monthly scale, yes, so we can use words like death cross, and we can use terms like golden cross. That's fine, but that's just one of the crazy things I hear people talking about all the time. But again, you have the 200-hour moving average that is coming in like a storm cloud to the price. This here Now this moving average, this 200-hour, now this is important. This is very substantial. You know, so that's one I will pay more attention to. But anyways, you can see we're kind of flirting here with trying to, you know, come down here, and so we'll see what happens. But I have us, you know, A, B, C up for this 2, rip down for the 3, 4, 5, and to hit our target in the next 4 or 5 days, 3, 4, 5 days, or something like that. So, you know, that's basically it. I just wanted to update you guys, let you know what's happening. Again, like, subscribe, you know, and thanks for watching. And I wish you guys, I wish you guys happy trading, and well, good luck out there. This is, you know, extremely volatile stuff going on. So, you know, we'll see where we're at in the next 24 hours or so. I expect it to be really boring though, and not much going on. So, anyway, guys, talk to you guys next time. Thanks for watching. Bye.